Well, I think for 2019, it's easy. The 6.1% forecast that I have had for the past year, not changed. I think it's quite likely to be achieved. The challenge is, of course, this year, because of the impact of the tariffs that were implemented last year, we would see more of the impact this year than last year. But then with the trade war risk now receding or stabilizing, hope is that the trade war impact on sentiment, on investment and so on in China is not going to be as big as it was expected last year. So I'm still looking at around 6% growth this year, which I think is quite achievable. What's important to note is that 2020, this year, is the year when the Communist Party assess this government's performance based on the previous policy goal of doubling China's GDP from 10 years ago. So China has to grow around 6.1% this year to achieve that goal. So I think that is a very hard KPI on President Xi Jinping. And the variable that will move to make sure that policy goal is achieved would be the policy variable, which means that if there is a significant downside risk to growth, I won't be surprised to see there will be more assertive easing moves by the Chinese authorities as compared to what they have been doing.
And just how assertive? I mean, in what form and what shape would that take, do you think?
Well, very easy, because China hasn't really done much massive easing. The cutting interest rates so far are very selective, so they can go on to blanket interest rate cuts, they can go on to pumping more liquidity, they can go on to allowing more government investment into the infrastructure area. Those are the easier tools that China can still employ, but Beijing doesn't really want to go back to the old way of reflating the economy, because it still has a very strong resolve trying to cut down on debt.
Yes, and that makes me wonder, Chilo, whether or not you have any concerns about debt levels in certain areas today, as we do see some cases of defaults growing.
Well, it is a concern, it's a macro concern, but it is not a concern that is keeping me up at night. I think the debt issue, the debt problem in China is still manageable, as long as the capital account is not open too fast, and as long as Beijing is not retreating from the implicit guarantee policy too quickly. I think this whole debt issue, it can be managed over time.
Chi, so I had a question for you. Inflation in China. Obviously, if oil prices continues to rise, and if PPI, let's say, continues to rise in China in 2020, potentially, are we going to see a bit of inflation happening again in China? Well,
that scenario, my concern is that we might see stagflation come in China instead of inflation and pushing the PBOC raising rates. Because if you look at the underlying inflation rate in China, it's been locked under 2% for more than 10 years. There's an inherent disinflationary drag in the Chinese economy because of structural reforms, because of debt reduction and so on in recent years. So the concern here is that if pork prices don't come down, if CPI keeps going up, about 4% towards 5%, I think the PBOC will be more concerned about how to manage this headline inflation rate while the underlying demand momentum is still not that strong. So we may see a situation of a stagflation in China, which I think is not good for risk assets.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.